Right, hello guys and welcome back to my channel Ocean Traders. Now essentially what we've got here, we've got a few pairs, commodities, and also we got futures as well. So let's start. We've got what you're currently looking at is UJ, US dollar against the Japanese yen. What's actually occurred there is a very bearish trend. Right now currently we're in a small uptrend. Now prior support reaching now current resistance, I'm actually expecting a change in trend. If that doesn't happen, we could go up to the upside of 107 and also penetrate this zone right here, 107.500, or actually break this trend line, the free trend line bounce to highs of at least 111.500. Now, will this happen soon? No, I don't think so. It could actually potentially take, let's say, 2 weeks or so. But let's measure how much pips, or how many pips, sorry, we could get. So yeah, probably just about 400 pips if you play your cards right, and you can obviously double up on your position. So that's that for UJ. Right, so the FTSE 100. I was actually anticipating a massive breakout on this, but unfortunately that didn't actually happen. We're currently bearish. We're still bearish. Now I'm actually anticipating prices to break up to the 7,240 region with a bit of turbulence and ultimately break through this key level. So we got prior support, current resistance. If it actually breaks through this level, then you could actually go long up to highs of at least 7,560. And ultimately that would be very lucrative for you to get into. If it doesn't, however, get out of the trade as soon as possible. And let's look at Brent crude oil. So as you can see, right, okay, I would actually start fresh. One thing, I must have said this in my prior video as well. One thing that a lot of micro enthusiasts don't actually understand is that you don't actually need direct exposure to currency pairs, right? Because of the politics involved with currencies, right? You could get that same exposure from currencies on commodities, which is actually good because the leverage is increased and also the margin is considerably lower. So if you have a very small account size, like let's say a 2,000 or 3,000 account size, you could actually put multiple positions on let's say the same commodities that have that exposure. So let's say the dollar, right? This downtrend actually occurred when the non-farm payroll came out, right? Now I knew I didn't want that sort of exposure on, let's say, USD CAD. I knew I didn't want that because it's really choppy, right? And it's a very rough ride. However, this was an excellent break, right? So what we've actually got here is one bounce, the second bounce on the 67, and it's actually approaching the third bounce. Will it actually rise to the upside of the 70? I'm not actually sure. I'm not sure, but we'll see. A break on this trend line is a barometer that the trend could potentially be bullish in the weeks to come, but we'll see. Just sit on your hands for now. Swiss franc against the Japanese yen. Okay, so this is actually recorded on my TradingView account. If you haven't checked it, go check it. Craig and M09. And essentially what I've said is, you know, the Japanese yen futures, they were showing very bullish trajectory, right? Which essentially means on the Swiss franc against the Japanese yen is that this actual pair would depreciate, right? So that means it will be bearish because obviously the Japanese yen is actually appreciating. If the Swiss franc is appreciating against the Japanese yen, then it will be bullish. But because the Japanese yen is appreciating, it will be bearish. So therefore, if you actually understand directional plays or price action, and you can sort of use it within other markets, it doesn't necessarily have to be just currency pairs, if that makes any sense whatsoever. So yeah, so you could do that if you fancied, because essentially I feel like just looking at currency pairs is good, but it doesn't give you that holistic picture that you need to forecast price trends, let's say 2 or 3 weeks in advance. So yeah, so it's actually hit all 3 of my price targets, my target profits, sorry. And yeah, this was a very, very lucrative trade. It did take probably 2 to 3 weeks, but yeah, over 300 pip gain. Really, really, really satisfied. Let's have a look at Facebook. Right. So what we've got here, downtrend, right? Will we actually break to the upside and take out the 184 price region? Would it actually break to the upside? I'm not actually sure, right? But I know I'll get in on this trade, probably near the 182 region, if I was to take an option on this, a call option on this, right? For you, all you American guys, I think that is actually the risk return on this is very good, because essentially you're getting a discount on potential return. The reason I say this is because loads of people are actually anticipating a very, very massive bull run on Facebook. So yeah, you could get in on the 182 price region if it actually does reach it, or you could actually go to the downtrend taking out prior low lows. But we'll see anyway. Just sit on your hands for now, and if it does reach 182 with significant volume, then fair enough. But for now, just sit on your hands. Swiss franc against the US dollar. Right. You could actually go check this pair out. I won't actually break this down because I feel like it's so straightforward. There's no reason for me to actually break this down. But you could actually go check it out on my TradingView account. And that's it. I'll actually go through my TradingView account just so you guys can see. So there it is. Breaking M09. So I've got commodities, I've got stocks, I've got currency pairs, I've got futures, I've got bonds, I've got indices. And I feel like loads of guys sort of limit themselves. I know I've said this in the prior video, but I'll say it again. Loads of guys sort of limit themselves because all they know is currencies, or that they just stick to one market. Now, essentially, the way I actually present my material to guys that actually want to benefit from my educational content is that you will benefit from probably three or four different markets, right? You don't need to stay in one market. You cannot approach all markets like they're in isolation. It's complete madness. So that's why I see currency enthusiasts, or currency traders, or forex traders, whatever you want to label yourself as. When you're looking at a chart and technically your technical approach or your technical bias, right, is actually bearish, but the trend goes against you, your approach to the market was correct. But if you got that holistic picture, right, you could see, like, even with the futures example I gave, right, you can see clearly that the 2 to 3 weeks trajectory on that on the Swiss franc against the Japanese yen pair, that was very bearish, and I knew this probably 2 to 3 weeks ago. Right, so I just feel like simple things like that, which majority of currency enthusiasts or just micro enthusiasts, they don't actually know, and they got to actually throw away their hard-earned money. Now, my sales pitch to you guys is the amount of money you will lose, right, in the markets, which is essentially gambling on, you'll probably break even on my course. So the amount of money you actually invest in on my course, if you were to take that material and actually employ it in the markets, you would break even. That's just my personal perspective. I've done it with guys and they actually showed me that they're making a lot more money on a consistent basis than they did prior. But yeah, just putting a lot of time on the charts and just learning intermarket analysis and approaching the markets on a holistic basis, having the wisdom to know that the markets they're not done in isolation, and yeah, that's it essentially. But yeah, this is a very, very, very brief video. Also, have I got the Euro GBP? Why not? I'll go on Euro GBP. Also, make an account with TradingView, guys. It's a really, really good platform. The other like chart platforms out there, but TradingView is really, really good. Get some decent exposure. So we're going to go through Euro GBP. So what we got here? Massive downtrend. Right. I believe what could actually occur on this pair is that there could be a potential kiss on the downtrend, and this sort of trend line is actually acting as resistance. So I believe that it could be future support breaking up to the 0.90,000 region. It's not that many pips, but it's still worth the trade, I believe. Anyway, that if it ultimately breaks through the trend line, then obviously that's off the table. But yeah, I believe that it could happen potentially in the next week or so, or potentially by the end of this week, that this trade is actually probable. Or it could break up to highs of 0.90,500 or 91,000, 0.91,000. That could actually occur. But we'll see, guys. It just depends on the fundamentals. Technically, we've got the right approach, but we'll see anyway. But yeah, that's it for now, guys. I will actually update you guys on a few currency pairs on TradingView. But yeah, for now, I'll just stick to commodities and probably get you guys involved with more bonds and more contract-based stuff like CFD, spread bets, and yeah. So yeah, guys, that's it for now. Remember to subscribe to my channel, like, comment, message me, email me. I'm quite sociable. I like a bit of I like to get conversations started. Also, my podcast is actually coming out on Apple, SoundCloud, and Spotify. So, but I'll just be talking about cryptos and probably commodities. I won't be talking about currency pairs. But yeah, that's it from me, guys. For now, yeah. Subscribe, like, and comment. Take care, guys. Bye.